Alright, so real quick, I wanted to try and continue to hammer in the point of trending trading range days. And right here, this day right here is December the 21st, 2015. And it's the 5-minute E-mini chart. And you can see, I was scrolling back there some days just for looking at stuff. And you can see we opened and went sideways for the first hour. Oops. So sideways for the first hour right here. And then we got a bear breakout. But if you notice, bear breakout, not really, not great follow through. Bad follow through here, right at the low of the day. So bulls wanted a double bottom. The bulls wanted a double bottom and measure move up, and obviously they failed. Bears wanted the opposite, and they pretty much succeeded. So at this point, sideways, not clear in terms of always in or who owns the market, but here clearly always in short at 950, 955. Follow through, probably always in short. So both these, it's probably always in short. Bad follow through, probably sellers above, and at least a second leg down. So bears will sell this close, and they'll sell above, betting on a second leg down. And you can see 3-bar breakout, so always in long, always in short. And here, this told you a lot of information if you were quick. This happened, well, it's a gap. Bulls bought this low and got trapped at this high, so we came back to this low during this bar and trapped traders. So you have bulls that are stuck. So we're probably going to measure move down. And anyways, no real reason to buy above a bar, but 3-bar bear breakout, so sell climax, bad follow through, sell climax, bad follow through, sell climax. So every sell off is having bad follow through. 3 bars down, bad follow through, doji, another doji, bear breakout, weak follow through. So this looks like a trending trading range day. If it's going to be a trending trading range day, then we're going to get an upper range, which we already have, and this lower range over here at some point, I can't scroll back any further, but at some point is going to form a lower range. So traders are already worried that, for one, bulls bought this low and are looking to buy more lower. Maybe they'll buy above this bar or maybe this bar. So they're waiting to buy lower, which means we're probably going to get a deep pullback. And notice how this is the break-even price for both traders, for break-even bulls. So if a bull wants to buy this low and buy above a bar, if they get out right here, they will only lose commission and not lose on the trade. Not including commission. So the longer we begin to go sideways, the higher the probability of a trading range or a trending trading range day. And you can see right here, we had a low 1 short, it did not trigger. Now we have a possible low 2 short, it did trigger. And we're starting to turn up. Or we're starting to go sideways, or you can just call this the low, you can call this the low 1, this the low 2, it really doesn't matter. What matters is you have a leg up, pull back, another leg up, so it's kind of a 2-legged pullback, leg 1, pull back, leg 2. But the bears are not doing what they need to do. And if they're not doing what they need to do, we may get a breakout of a bear flag. And notice how here's the sell-off, and we went sideways for 1, 2. Here we went sideways for 18 bars. That's enough sideways to conclude that we're probably in a trading range, and this pullback has become a trading range. It's unclear. And you can see here probably always in long, and we're probably going to test this high. So right here is kind of always interesting. Right here. So this low is 87.5, this high is 87.25. So we're stalling 1 tick below here, And you have to be careful. Sometimes you'll get a sell signal right, in this case, right below obvious resistance, and that's partially why that did not trigger. So I would never short one tick below a gap like this, a logical place for bulls to make money. I would wait. Second off, the very tight channel. Bulls have not made money shorting below a bar. Actually, well, they made a 1-point scalp here, but still a very tight channel. And as you can see, once we broke above here, the next thing the bulls wanted, was a test at the top of the trading range, or the test at the top of the channel. So that a spike, pullback, and then a channel. We tied just the channel here. So any swing bear who did get out below this bar probably got out above this bar or on one of these closes, and we just melted away at the end of the day. And like I said earlier in the video yesterday, that's the problem with trading range days. They just melt away because there's never a clear bottom. Is this a trend line? Is this a bear trend? Is this the trend line break? Is this a higher low major trend reversal? It's not clear. So, and the more unclear it is, the more likely bears will sell and fade the move up, which means we probably won't get a strong breakout and we'll just sell off. So, hope this helps. Let me know if you have any questions.